Okay, recording video on Sunday, the 3rd of December, 2023. Just gone 4:02 a.m. Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I'm seeing on my charts. Do hope your trading is going well. We kept on powering ahead. This week we're now up at 4,600 on the E-mini. Despite my warnings that we were going to have some weakness last week and this week, just hasn't eventuated at all. But just so I'll sound like a broken record, I'm going to say we're going to have some weakness this week, maybe. I don't know. Anyway, we're going to start off with the E-mini charts, go through daily all the way down to the 15-minute and the tick bar charts, and then we're going to look at some of the longer time frame futures markets because we've got some nice trends really starting to power ahead there. So finally, with this week's trade, we got our resistance on the intermediate time frame come in. So this is the traditional view of the better indicators, two panels side by side, everything to do with volume on the left hand side, everything to do with price on the right hand side. And Better Sine Wave has been warning for some time that we've got a cross on the intermediate time frame here. We bust above resistance on the lowest time frame on the daily chart, and we get caught by resistance coming in on the highest time frame, and that came in because of the weakness we had Wednesday into Thursday, and we've got amateur bars up here at the highs. And as we look at some of the other charts, these amateur bars are actually signaling a RAMBO pattern. So I'm going to show you those. And it's interesting the difference between these different charts. So this is a daily chart of the E-mini, day session only. The next chart I'm going to show you, this is the S&P 500 ETF, the SPY. You can see here we've signaled a RAMBO pattern with a whole family of amateur bars up here. But for me, what's interesting is the levels that these have happened at. So the two highs that we've had, that you can see here on this daily chart, are almost matching one for one. But the futures market is distinctly lower than the high that we reached several months ago here on this daily chart. So that's interesting to me. You might say that the ETF is more of a retail traded product versus the futures, which is more a professionally traded product. So for me, the futures market is more important in terms of directionally where it's going. But there's an interesting difference there in the strength of these two markets going forward. So we've not signaled a RAMBO pattern here on the E-mini, but we have on the SPY. And I would say with these RAMBO patterns, look for the lows of the amateur bar sequence here. So all of these amateur bars happened this week. 1, 2, 3, 4, 5 bars here, all amateur bars, and so the low of this week is a really important level down here. So we're talking about 4,500 and a bit on the E-mini, or 450 and a bit on the SPY. So the SPY has signaled a RAMBO pattern. Just to recap, a RAMBO pattern stands for a potential reversal of an amateur breakout, and so it just means that the move is being led by the amateurs, and so just it's a little bit suspect, a little bit wary of where that's going. Pullback to end of trend, potentially signaling on the SPY here, and it has actually signaled on the NASDAQ futures. So on the NASDAQ futures here, we've got a RAMBO pattern and an exhaustion buy pattern and an end of trend on the intermediate time frame. So I read this as left shoulder being made by pullback to end of trend on the lowest time frame, and then the head of the move, pullback to end of trend on the intermediate time frame. That then we drop off until we get support on the highest time frame, when then these two thick lines kind of come together down here at minus 100, and that'll be the support that we have that then pushes up for that final push into those highs. So we've got this seasonal pattern that is playing out. Just remind you, you've got a nice little article on the seasonality of the stock market with some free code here on the Emini-Watch website. If you go down here, there are 5 patterns that are pretty consistent in terms of seasonal trading, and this last one is the Thanksgiving pattern. Strength from late November into the 10th of December, so it really runs quite a long time actually there, and so we're the 3rd of December today, so that seasonal strength has still got about another week to run. But just beware of this, that we've formed this high and we've got RAMBO patterns up here. And then lastly, the Dow. The Dow and the Russell really caught up over the last several days, and the move up on the Dow has been quite extraordinary. The Dow and the Russell have been the weakest of the lot, and finally they've busted out now of this channel to new highs. But that high that we've formed at the moment, all of this move has been amateur up bars into finally that RAMBO pattern going off there. We've got exhaustion buy happening here, potentially a bearish divergence pattern forming here as well. But it's interesting that on all of those 3 charts, so the SPY, the NASDAQ futures, and the Dow futures, we've got these RAMBO patterns up here. So just be cognizant of that. We are in a confirmed uptrend. I'm not calling it a change in trend. All the end of trend patterns and these RAMBO patterns mean is that this move is just temporarily being driven by the amateurs, and it's suspect we might have a little bit of a drop off, at which point the professionals will step in and then push us back up. Confirmed uptrend because the background is in red. We're in an uptrend in terms of both volume and price. So there we go. Just interesting that those patterns are starting to form on these different markets. So just be aware of that. So let's go down some time frames. So the 135-minute chart, remember there are exactly 3 135-minute bars in a day session of the E-mini here. We had our sell-off, very little selling down here, and we bounced from there up here at these highs. Last week we had amateur bars here, but 135-minute chart hasn't shown this last move with amateur up bars. There's our resistance coming in on the intermediate time frame on the daily chart. Becomes the highest time frame on the 135-minute chart, and that's what's formed there. We're putting in a little pullback to end of trend on this chart, but the end of trend has not signaled quite yet on the 135-minute chart. The 45-minute chart, there we go, there's our left shoulder signaling pullback to end of trends on the lowest time frame here. And we've got some blue professional bars starting to come in at those highs. So here, this was actually last weekend, we had the RAMBO patterns kind of coming up here. And I would say watch for the lows of the amateur sequence that leads into that. So I don't know whether you're talking about this level or this level here on the amateur bars, but neither of those really got broken to the downside. So we didn't have a change in trend because of those RAMBO patterns. But now we've got some blue professional bars starting to come in, taking profits at those highs. 15-minute chart. There we go. This was this week's activity. We had exhaustion buy, bearish divergence comes in with that gap open, and we sold off. We had some professionals, selling it down at that point, but then we also had some professional activity finding that low and pushing it back up. So with these blue professional bars, pushing it back up into these highs. We're pretty overextended here with exhaustion buy, bearish divergence, and flush patterns right here at those highs. So pretty overdone up here with all these end of trends gone on, just pushing and pushing and pushing. And finally, we get some exhaustion patterns and blue professional bars that we have not had in the last 2 weeks. And so, any weakness or drop that we have on the 15-minute chart, we're looking for the highest time frame to come in to catch this move at some point. So that's the 15-minute chart. And lastly, the tick bar chart, the highest time frame on the 13,500. Remember, the beginning and ends of the week are marked by these solid yellow vertical lines here. You can see here that was the gap up that we had Wednesday into Thursday. RAMBO patterns into those highs, and we sold off, but we had exhaustion sell, bullish divergence, and a flush pattern kind of coming in here to hold it. We had cyclical patterns kind of come together, and then we break into an uptrend again, and we're up at 4,600. So on this tick bar chart, we've had one little pullback to end of trend on the lowest time frame, but we've still got to put in testing with the pullback to end of trend on the intermediate time frame and maybe on the highest. So let's see where that goes this week. These levels are really important, the low of this week, to see if that gets broken at all as a signal that things might be cooling going forward. So from time to time I switch it up, and instead of looking at the tick bar charts, we look at the higher time frame charts, and that's what I'm going to do in this weekend's video. With these higher time frame charts, I like the one step down from the daily charts, where we're looking at 3 bars in a day session. So the euro, for example, we're looking at a 460-minute chart here. Everything's a little bit squished up on this chart, but if you look broadly at what's going on, we've got the Forex charts on the left-hand side. So we've got the euro, British pound, Aussie dollar. We've got the Japanese yen, and then the 10-year notes and the E-mini here. And then we've got the precious metals, gold and silver, and we've got Bitcoin beneath that. And then the right-hand side, we've got our commodities. We've got crude, natural gas, copper, and then we've got our ags, corn, soybeans, and wheat. You can see all of these bars are in red on the left-hand side. We've got all the Forex charts taking off to the upside. Been talking about that for several weeks. We've got the Japanese yen, also interestingly, possibly breaking into an uptrend at the moment here. 10-year notes are in an uptrend, and the E-minis in an uptrend, because all of those bars are printed in red, showing an uptrend on better sine wave. We've also got all the precious metals signaled weeks and months ago. Gold's in an uptrend, silver's in an uptrend, Bitcoin's in an uptrend, and this week we definitely got confirmation that copper's in an uptrend. But everything else is pretty weak. So we've got the crude showing us that we're weak, everything's in white, natural gas, white, white, white on the way down, and then the ags here with corn, soybeans turned white this week, and wheat down here, mostly it's been white, but potentially finding some bottom down here. But let's look at some of these charts. First of all, let's look at the crude chart on the higher time frame, because here we've got a stair step down. So we had blue professional bars taking profits up here at 90, They pushed it back up under the lip trade. Weakness here with these white down arrows. And then this week's trade, Friday's activity, bang, blue professional bar comes in, sells it down, and we've got a stair step down on better pro-am. We've not got exhaustion sell to end this move down here. This is the exhaustion sell getting the move going. So crude is definitely looking weak. So let's see where we test back into a crude to form an exhaustion sell pattern to end that move, but that's looking weak. Natural gas, this has been signaling weak for some weeks. Blue professional bars up here, sell it down, we come back up to $4. They sell it down as well, and we're down at 277 on natural gas. Copper this week did actually signal some strength. So we had blue professional bars down here at the lows and then took off with a stair step trade here and a stair step trade here with Friday's activity on copper. So we've got some differing patterns in terms of the energy complex and then the industrial metals going on here. But British pound was strong. This week we've had blue professional bars coming at 121 or so, and we've been powering ahead, oversold at that point there. With background in red, we've got Aussie dollar, also strong. Down here we have blue professional bars coming in at 63s, exhaustion sell bullish divergence flush pattern. Triple signal goes off, so we're coming back up to 67 on the Aussie. And then the euro. Euro is actually weak Thursday, Friday here, but we've got blue professional bars stepped in with a bullish divergence pattern down here, and we've actually signaled long. On that last bar of the day, we definitely caught this low, and we powered ahead. We need to get back above those blue professional bars to show that that's actually been an area of weakness where the professionals have stepped in. We're going to push it up higher above 110, 110 and a half. So all of those are looking pretty strong. But interestingly, on the Japanese yen, we've got a whole bunch of blue professional bars kind of come in here. We're about to signal. This bar is still white at the moment, but that could easily turn red in the next couple of bars as the better sine wave trending system reverses and goes the other way. So Japanese yen starting to power ahead would be interesting. And 10-year notes. 10-year notes, we had a signal a couple of weeks ago. We had exhaustion sell, bullish divergence, blue professional bars come at the lows, oversold at that point, bang. And then with Friday's last bar of the day, bang, blue professional bar, stair step trade, sign of strength at that point, powering ahead. So for me, these big trends are super important. We've got weakness in the US dollar, we've got strength in these Forex charts, potentially strength in the Japanese yen, and also the euro joining in all of those trends, which will be interesting. And then gold. Gold went up to almost 2100 this week. So there's our signal, triple signal. All the blue professional bars coming at the lows at 1850 down here. That's super important. That's what you need to look for. Blue professional bars at the lows, exhaustion sell, bullish divergence, oversold, background in red. We break above the trailing stop, and that's what generates our triple signal here at 1945, something like that. We test back in, a little bit of weakness. We're caught here. The lows of those blue professional bars, that sequence that got us going, and then we power ahead and we're breaking into an uptrend. We're going to be looking to test 2150 on gold. And silver, same thing. Silver's joined in. Similar signal down here. All the blue professional bars coming in at 21.5, and we're back up at almost 26 here on silver. Bitcoin, we're looking ahead at 39,000, possibly 40,000. Again, signal here is a very junky trade with Bitcoin, but we did get a triple signal here after the same pattern sets up for a break above that. Blue professional bars getting the move going through 30 and keep on buying up through 34. And we're now up at 40 on Bitcoin there. So there we go, rip around the higher time frame charts. And next week for me, what I'm looking forward is that we get those continuation of those moves after the blue professional bars step in late on Friday. So with copper, with crude, with the euro and the 10-year notes. So let's see if we get some follow through on those blue professional bars with each of those charts. So there we go. Hope your trading is going well and looking forward to next week's trade.